everybody. Thank you for coming to this panel today. My name is Jesse Day. I'm the host of Commodity Culture, a YouTube channel that focuses on investing in commodities and natural resources. I'm very excited today to bring you Durrett and Christopher Aaron. We're going to be talking about stocks that they love at the moment, and we're going to be getting some insights from them into these companies, why they're bullish. So let's start off, gentlemen, by getting a brief introduction for those who might be unfamiliar with your work. And Don, I'll start with you.
Don Durrett. My website's Gold Stock Data. I also wrote a book on how to invest in gold and silver mining stocks. It's probably the only one that really explains it. You can find it on Amazon. And also you can follow me on Twitter.
Yeah, Christopher Aaron, and the website is igoldadvisor.com. We do independent analysis on the precious metals, don't sell the metals. I invest in physical metals, and we have a group of investors as well in a private placement service. We come together, we do financing several times a year for these companies here.
Great. Well, let's get started. We're going to do 3 stocks each, why you're bullish on those stocks. Go in depth if you'd like, but keep in mind, we have around 20 minutes here, so we'll go back and forth, one stock, and work that way. So, Don, let's start with you.
Well, I'm actually going to break your rules a little bit. I'm going to I'm only going to discuss 3 stocks, hopefully 4. But today I'm going to be nice to you guys and tell you I own 47 silver miners, and I know all of them very well. I've been doing this for 20 years. So I'm going to give you my 15 must-own silver names, and so you guys can take notes. The first one, I have a list on Twitter that I call the Mormons, and these are the stocks you can marry. So you can marry all of them. So this Mormon list is basically the 8 best silver plays that I believe in, and I'll give you the ranking. I actually ranked them: Coeur Mining, Hecla, First Majestic, Pan American, Endeavor Silver, Fresnillo, Hochschild, and Aya. So those are my Mormons. And then added to that one, number 9 would be Silver Corp. It's not quite pretty enough to make the Mormon list, but it's almost there. And then 2 development stories that I just think are most owners, Go Gold and Vizsla. And now I'm going to discuss the ones that I like. So I'm just going to do one. We're just going to do one each.
Yeah.
So the first one is Avino Silver. I think Avino Silver is probably the cheapest silver producer out there. They have 370 million ounces of silver equivalent. They're only mining 3 million, but with all that silver, they're just a growth story. They're valued about 165 million. It's just crazy cheap. I think that they're going to grow production like 1 million ounces a year over the next 3 to 4 years. As far as I'm concerned, someone's going to take it out. Once silver gets to $35, I think they're going to get a hostile takeover. The only thing that's going to prevent it, I think, is they get some type of a white knight, some strategic investor, maybe Eric Sprott comes in to prevent it. But they're just so cheap. It prints out as like these 4 names I'm going to list all print as 20 baggers in my opinion. So I put Avino at the top of the list.
Great. And Christopher?
Okay, so there are 2 categories of stocks that I like right now, especially, we focus on precious metals, but we do a few diverse commodities as well. There are 2 categories of stocks that I like right now. First category is genuine new discoveries. So I'm going to talk about that first. The company that I like right now, I think it's going to be the discovery of 2025. They are here. It's called Provenance Gold Corp. Ticker is PAU in Canada. Provenance. The interesting thing about them, it's a Canadian company. Their asset is in Eastern Oregon. It's the El Dorado project. Some people are going to say, Oregon, whoa, we can't go there. Big difference between Eastern Oregon, which is much more like Nevada as far as mining friendliness goes. Big difference with Eastern Oregon, Western Oregon. Eastern Oregon is very pro-mining friendly. The big deal about Provenance's project is there were 3 historical resource estimates for this El Dorado project, all done in the 80s and 90s. The average of the 3 estimates was 2 million ounces of gold. Now, modern standards, they do not allow the company to call that a current resource. So They began drilling in the ground, and this year in their diamond drill program, they found visible gold 3 times deeper than the previous resource estimates. 2 grams per ton going down 300 meters below the ground. That is one of the single best drill holes that I have seen in the entire gold mining world for all of 2024 and 2025. So Providence Gold Corp looks like they are on to something really big.
Fantastic. Don, what's next on your list?
So the 3 stocks that I'm going to mention today these are all basically high alpha stocks, if you will. So the first names that I mentioned have a lower risk. So these are kind of the ones, if anybody that's chasing alpha, if you will. The next one I'm going to mention is Discovery Silver. So Discovery Silver, their deposit that they want to build, they've submitted their open pit permit already. So it's a very advanced project. In their feasibility study, they're only going to mine 500 million ounces, but they have 1 billion ounces. So nobody's really given this company a lot of value because they've had all these open pit permit issues in Mexico. But I think that they're going to give out open pit permits for any projects that are have already submitted or going to submit. I don't think it's an issue for these companies. So if Discovery gets their permit, it's one of the best development plays in the silver space just because of the sheer size of it. Also, their AISC in their feasibility study was $13, which is actually fairly low for a company they're going to mine 23 million ounces the first, I think, 3 years, and then in year 4 it jumps to 30 million ounces of silver equivalent. So this is going to be one of the largest mines in the world, and you can buy today for very cheap.
Christopher.
So I think, is this on? Are we on here?
Yep.
I think Don and I have different ways of analyzing the market, which is great, to each their own, and that's what makes a market a market. The way that I primarily analyze stocks is I look for beta to the metals. I look for demonstrated beta, which means a proven history that when the metals themselves move higher, that the stocks move higher. So that's the number one thing that I look for. In my philosophy, all of the fundamentals are baked into the stock price. The sum of human knowledge is baked into the stock price. So I primarily focus on the stock price. So the second category of stocks that I'm looking for right now are these high beta stocks that have proven the ability to leverage the metals prices in previous cycles. And so a name that I want to give is Southern Silver. Southern Silver Exploration, ticker is SSV. They are here, they're presenting today. You compare the price of silver to the price of Southern Silver. Every time silver moves, Southern Silver moves a multiple of the silver price. I can talk about the fundamentals. The fundamentals are they've got 300 million ounces of silver equivalent in the ground. It's in Durango, Mexico. It's going to be an underground mine, so they don't have to worry about the bans on the open pit mining. You know, grades are about 250 grams per ton, so it's a decent grade. They're a polymetal deposit. I can talk about all that, but the bottom line is every time silver moves, Southern Silver moves, and that's what I look for in this cycle.
Well, it's fantastic to hear both of your investment philosophies and how they differ. I think people can get a lot of insight from that. Don, what's next on your list?
Yeah, so I'm actually going to list 2, but I'll give you the last 5 minutes because I had 4 20-baggers on my list.
We still have time, so don't worry about it.
Okay, yeah, we have time. We have 10 minutes. The first one is Silver Tiger. Silver Tiger is a development story in Mexico. Glenn Jessup, the CEO, I really like the fact that Glenn is very motivated to build this mine. I like his plan. He checks all the check boxes for me. And it's very cheap. So what they're going to do is they're going to start with an open pit mine that's mainly gold, but he's calling it silver equivalent because the company's Silver Tiger, and their underground mine is larger and it's high-grade silver. But so it's a two-stage project. So first they're going to build the open pit. They're trying to get the permits now. Then after that, they're going to go underground. I like to focus on these. I don't invest for short term. I never invest for the next year, for instance. So Silver Tiger, I look at it as a kind of a 3 to 4 year, 5 year play. And if silver prices, I also focus on the future. I focus on silver prices going higher. So if Silver Tiger ends up building both of these mines, their open pit and their underground mine, and they get them both into production, the free cash flow will be enormous versus their current valuation. The next one is Silverstorm Mining. And Silverstorm Mining, they're another development play and actually a near-term producer in Mexico. So they bought a project from First Majestic called La Perilla. It was too small for First Majestic, so they had to shut it down in 2019. And it only has about 20 million ounces of silver equivalent, but that's enough for them to mine about 2 million ounces a year. But the story with Silverstorm is their San Diego project, which we're basically getting for free. And the San Diego project currently has 220 million ounces of silver equivalent, but it's low grade. It's only 110 grams. And people are like, I'm not going to touch it. Well, it's only valued at $34 million. But they think it's going to grow by at least 50%. So you're getting 300 million ounces of silver for free. If they get San Diego into production, the combination of La Perilla, their underground mine, which I think they'll be able to extend the mine life, they're pretty confident, between the two of those two mines, but it's a long-term bet, right? But I like getting in early. For me, it's all about entry and then waiting for higher prices. So Silverstorm, long-term, for me, looks really good. So those are my four kind of 20-baggers, if you will. With a big alpha, and then I started off with the Mormons, which are kind of the low risk, and then in between that I mentioned two developers, which is the medium risk, and that's kind of how I invest, kind of a balanced approach with overweight producers, and then some developers, and then some more high alpha plays. So those are my 15 must-own silver plays. So I'll let Aaron finish it off.
So I want to talk about what's going on right now in this market compared to previous cycles. If you were investing in gold, silver stocks in the last cycle, let's call it 2000 to 2011, pretty much as the metals moved higher, the producers and the developers moved higher as well. I mean, it makes sense. You have higher gold prices, you should have higher gold miner prices. That would be logical. We don't live in a world of logic, however. We live in a cycle where from 2015 through the present, the price of gold has nearly tripled, and you look at a lot of the gold miners today, you look at a lot of the companies that are sitting on that very metal that has tripled, and these companies are making new 52-week lows right now. 52-week lows, all-time lows, reverse splits. I mean, I don't know if we're not supposed to talk about this because, I mean, this is a mining conference, but this is what a lot of us have been dealing with. And so, for investors who understand this divergence, that as the price of gold goes higher, gold in the ground should be worth more, but it's not worth more right now, you have an arbitrage opportunity. You could do one of two things. You could either short physical gold itself, which I would not recommend doing because if there's a black swan event or a World War III breaks out, gold shoots higher and you blow yourself up. The other thing to do is to go long the gold in the ground that is literally being given away. I mean, almost for free at this point. So in that category, there is a little company that I am investing in that is called Bravada Gold Corp, BVA. Bravada has 1 million ounces of gold in their measured and indicated category at the Wind Mountain deposit in Nevada, and the market cap is $2 million. So 1 million ounces of gold for $2 million. That's $2 per ounce in the ground right now. It's a past producing mine. They produced gold. They produced 300,000 ounces of gold back in the 80s and 90s, and then they shut the mine down because gold prices were too low. So you've got $2 per ounce in the ground right now. Historically speaking, in a healthy bull market, companies with deposits like this can get taken out for $25, $50 per ounce, sometimes even $100 per ounce. Let's use the low range estimate. Let's use the $25 per ounce. From 2 to 25 would be a tenfold move just based on the existing gold in the ground right now. I can't promise it's going to happen. The market could stay irrational. It could stay illogical longer than any of us can stay solvent. That's the famous saying. But if you're looking at this from, look, physical gold, could it go 20, 30% higher over the next couple of years? Sure. Could a Bravada gold go 10 to 20-fold higher in the same period of time? That's the possibility.
Great. Well, gentlemen, this has been a fantastic conversation. Before we do close things out, for people who want to hear more from both of you, where's the best place to go online? Don, let's start with you in gold stock data.
Yeah, well, I have about a minute and a half, so yeah, you can find me at Gold Stock Data or find me at Twitter. But I want to mention something about optionality plays that he just mentioned. I did a video on 55 optionality plays, exactly what he's talking about all these stocks that are just trading at, I did a minimum of $20 in the ground, but most of them were $10 for gold in the ground, and a lot of them under 10. And I did $2 or less silver, and there was a lot 50 cents. But yeah, they're all over the place. He's absolutely right. The one risk with optionality is how many insiders they have and how long they're going to wait, how long they'll wait until they sell. So you can buy these insiders thinking, well, I just paid $10 in the ground, I'm going to get back, 5-bagger. They're not going to sell till, say, $60 in the ground, but they could sell earlier. That's the one risk with it. But if they don't sell, if they hold, like Southern Silver is a good example. Southern Silver, it's one of my stocks I do own. I just have my fingers crossed that they are patient, that they don't sell early. Because if they're patient, that thing is going to be worth $2 in the ground, $3 in the ground. So that's the one thing on optionality. You just have to hope that their insiders and their management team realize what they have and they'll hold on to it. Like, well, Free Gold Ventures for me is my favorite optionality play because Eric Sprott owns 29%. He's not selling. It's currently valued at $10 in the ground, and he's basically said, look, you can't have my shares until it's at 100. So do the math. That's a 10-bagger. So I'll pass it over to you, Chris.
If you guys want to find out more, the website is the letter I and then goldadvisor.com. I'm also pretty active on YouTube, Twitter, or X. The handle is I and then Global Gold. Thank you.
Great. Thank you so much, everybody. A round of applause for our two panelists today.